each phase, we get phase 1 of the banana zone, banana number 1. The corrective zone, banana number 2 comes. Another correction, banana number 3. So this is the banana zone. So that's what happened in 2020, 2021. Off we go. Sorry, that was 2017, which again looks very similar to this one. That was the last one. Here we are now. It can't be clearer to me. I've shown you the macro evidence, the technical evidence, the sentiment evidence. Everything here suggests to me that hold on to your hats, don't fuck this up, don't lose control of your tokens, don't use leverage, don't get your wallet hacked, just sit with it, be careful, don't get FOMO, do all of the right things, and we'll go up to the next phase of it. So it's the same chart, but now we can see what happens to Bitcoin every time this happens. It breaks out, retests, and then Bitcoin starts hitting the next leg of the banana zone.
Raoul Pal's prediction is based on a strong macro thesis about liquidity, which is what drives asset values. He thinks it is intentional, not by accident, that we are moving into a new stage of global monetary expansion. Due to growing balance sheets, easing interest rate policy, and a change in market sentiment, central banks, particularly the Federal Reserve, are creating waves of liquidity that support risk assets. According to Raoul, the current climate is ideal for the sharp rise of tech stocks, cryptocurrency, and other assets of the exponential age. He claims that we are not only seeing a recovery, but are also beginning the biggest cycle of wealth creation in our lifetimes. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Global M2 does a very good job. Again, like the dollar version, this is wildly outperforming what happened at the Trump previous cycle. So we've got plenty of dollar liquidity. Global M2 is driven by two things: the dollar itself, which is why it's accelerating so much, and then the global financial system, that's the banks. And what they're doing now, all of the governments around the world and the central banks are forcing the banks to buy debts. Basel IV is a reason behind that. The new changes to the SLR in the US. All of this is a way of forcing bonds and debt into the banking system, and then forcing the banks to create more money using them as reserves. It's just another way of debasing the currency. So global M2, when we look at it outright, it does the same pattern every time. These patterns repeat not out of voodoo, it's because it's driven by the debt refi cycle. The average maturity of global debt is 4 years. They're all between the 3 and 5 year sector. There's some long-term debt. Nobody can issue long-term debt because the market won't absorb it. So what we find is we're shorter term. Every time we do this, we have a breakout, a retest. So this was the 16-17 cycle. This is the equivalent one, I think, now. Breakout, retest, explodes higher, does this whole liquidity tightening. That's the bear market. That's when the economy slows down. That's when rates go up. Does the same thing. COVID gave it a false, a double shot. It did it again. We're doing exactly the same thing. It's almost a complete repeat of the 2017. So what we're seeing is global M2 at all-time highs. That should mean all-time highs for asset prices. That's how the world works. What we've also got here is global M2 against Bitcoin. So it's the same chart, but now we can see what happens to Bitcoin every time this happens. It breaks out, retests, and then Bitcoin starts hitting the next leg of the banana zone. Usually you start the banana zone a bit earlier with the breakout, you have the correction, and then it goes. And I've talked about this, there's 3 phases of the banana zone. Phase 1 was Q1 last year, as we started to break out in all these measures, new all-time highs in liquidity, Bitcoin goes to all-time highs. We have the corrective period, which is the correction zone, and then we get the banana zone part 2, which is usually alt season. This is the fabled chart that everybody in the world has copied from me, but this is the global M2 chart versus Bitcoin with a 12-week lead. It's been like voodoo. It is the most voodoo-like chart I've ever come across, and it works. Will it work entirely? Often what you find is later on, Bitcoin outperforms global M2 because of the speculative mania that builds over time as people realize what's going on. What it tells us is the back end of this year is basically a one-way street with a few corrections. The corrections will be normal. You will be questioning me saying, is it all finished? Is the banana zone finished? Is it all over? Do I need to get out now? And generally speaking, just follow the money. It really is that simple. And the best one I can think of is we're in the banana zone. So the banana zone comes in phases. I'll show you that in a sec. But basically, in that correction, using a simple measure, RSI, we got to hilariously oversold. What normally happens afterwards, period of sideways consolidation, break higher. We've just had the sideways consolidation, This is what happens if you put all of those periods together, create an average. That looks the same as the liquidity chart. It's all the same thing, right? It's all telling you exactly the same thing, which is the banana zone is upon us. That's when the dollar had this massive move. It was a 4 standard deviation move, one of the largest, fastest moves in the dollar's history. What happens after that? Well, after the red line, number go up. People say, well, we must be near the top. What happens when we're near the top? This is everyone's fear, always. Near the top, we're nowhere near. Our cycle top indicator is a long way away from anywhere. In fact, we're at very subdued levels, much like we had in 2013 before the largest bull run of all time. Now, I'm not guaranteeing that, but I'm just saying, probabilistically speaking, things are very positive going forwards. I see no reason for any fear. Finally, the fabled banana zone chart. The construct is the same. It's not a mystery. It is a repeat of the debt cycle. They are rolling the debts. They are doing the same thing. Each cycle is not to do with a halving cycle, nothing to do with any of that. It's all driven by liquidity cycle and funding of debts.
Raoul Pal thinks that although history doesn't repeat itself, it frequently rhymes. He anticipates a well-worn strategy as the United States gets closer to the 2026 election cycle. If Trump makes a comeback, there might be fresh calls for a depreciating currency to encourage exports and economic expansion. Raoul claims that this will further increase the banking system's liquidity in conjunction with a significant global debt rollover. In his 35-year experience, he considers this to be one of the most potent and simple macro settings. Additionally, he relates a painful lesson he learned in 2017 when he sold Bitcoin for $2,000, only to see it rise to $20,000 months later. He acknowledges that's how you screw it up. His advice is straightforward. Avoid overtrading. Avoid using too much leverage. Keep your focus. Simply ride the wave. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
Each phase, we get phase 1 of the banana zone, banana number 1. The corrective zone, banana number 2 comes, another correction, banana number 3. So this is the banana zone. So that's what happened in 2020, 2021. Off we go. Sorry, that was 2017, which again looks very similar to this one. That was the last one. Here we are now. It can't be clearer to me. I've shown you the macro evidence, the technical evidence, the sentiment evidence. Everything here suggests to me that hold on to your hats. Don't fuck this up. Don't lose control of your tokens. Don't use leverage. Don't get your wallet hacked. Just sit with it. Be careful. Don't get FOMO. Do all of the right things, and we'll go up to the next phase of the correction zone. That's going to be harder, because the next one that happens, we'll have a 35% drop, and you'll all say, is it over? And you'll definitely be sure it's over, and everybody on Twitter will tell you it's over, and it won't be over. By our work, we suggest that because of the elongation of the business cycle, because rates were higher for longer, the forward-looking liquidity suggests that, again, probabilistically speaking, without any guarantees, this whole thing goes into Q1, maybe Q2 of 2026, which would align with Trump's, trying to win the midterms as well. So everything's lined up for us. I think it started. So keep the faith, keep building stuff, and let's keep driving Siri forward with all of this. Thank you. So people are talking about recession now. We've had this negative GDP print. A lot of this is technically driven by the imports that are happening to load up on inventories as tariffs come, so people don't have the price shock. Okay, fine. So most of this is going to get unwound. Why? Because global growth is about to pick up super fast. So the Philly Fed, this whole presentation was put together a week and a half ago to send here, so it's all out of date. So the Philly Fed latest numbers came in exactly as predicted by us, by this chart. It's actually quite useful because I just went through this deck this morning, and all of this was from 2 weeks ago, and it's all proven to work. So Philly Fed comes down now. So what we should see is now an increase in economic activity going forwards. So i.e. the back end of the year is going to look very different than the first quarter did. I use a lot of technical analysis. I even do it on economic data, which is abhorrent to most people, but it's worked for me for 35 years. And I use, this is a system called DMARC indicators. And basically it's telling you that we should see the economic surprises starting to rise. Bitcoin is led by financial conditions here by 3 months. The year-on-year rate of change of Bitcoin, we should start to see very dramatic movements in the price of Bitcoin going forwards. And I'll show you a bit more about this in a sec. And to go back to that idea that the Trump cycle is repeating. I mean, it's an incredible repeat, but more powerful even than 2017. Those of us who were in crypto in 2017, that's when I made the mistake around this time of year, thinking, you know what, I'm going to sell my Bitcoin at 2,000. I bought it at 200 in 2013. It went to 20,000 at the end of the year, and I felt like a complete moron. And I managed to buy it back in the sell-off in COVID, and I bought it back at 6,500. So I sold it at 2,000 and bought it back at 6,500. That's how not to do things. That's called fucking it up. And so I'm trying to teach you how not to do that. So the dollar, Trump last time around, same thing. The market's priced in tariffs. The dollar screamed higher. It created this weak patch of growth. Trump came out and said the dollar's too high. Guess what? Scott Bessent, who's a macro hedge fund manager, I've known him for 20 years, 25 years. He understands the game. Trump said the same thing. Everyone said the same thing. The dollar's too strong. And hey presto, the dollar has utterly collapsed. And we haven't started yet. And it's a cyclical thing. It's not the end of the dollar. That's another narrative you read. There can't be the end of the dollar right now because 87% of world trade is in dollars and 50% of the entire world's debt are in dollars. So that's 200% of global GDP is actually in dollars. So there's a shortage of dollars globally, and that won't go away for a long time. So the dollar's collapsing. This kind of thing is a massive tailwind. As the dollar weakens, it means that the more global exports pick up. Everybody who's a foreigner who services US government debt, it's cheaper to service the debt, costs them less of their domestic currency cash flows. So it's a very powerful setup. A weak dollar is incredibly good for world growth. It allows China, everybody else to start exporting. The whole world economy starts picking up.
Raoul Pal leaves us with a strong lesson. Don't let the temporary commotion deceive you. He thinks this is merely a short-term stumble brought on by technical factors like inventory stockpiling because of tariffs, despite the fact that many are concerned about a recession and negative GDP prints. He asserts that the fact that global growth is set to pick up speed is what counts most. What his charts forecasted weeks ago is already being validated by new data, such as the Philadelphia Fed figures. Raoul tracks economic momentum using sophisticated methods indicators, and at the moment, all of them are heading upward. He believes that risky assets like Bitcoin are closely related to the improved financial situation. He even thinks that the current configuration is superior to that of 2017. He sold Bitcoin at $2,000 back then, which was a mistake, but later that year it rose to $20,000. He is cautioning investors this time not to overthink it, to keep focused and ride the wave rather than overtrade or become overly leveraged. Global exports will increase, and debt will become more affordable to service globally as the US currency declines once more, similar to what happened during the Trump cycle. An enormous economic tailwind could be caused by this change. Raoul believes that one of the most obvious and potent macro setups in his 35-year career is created by a global debt rollover, declining dollar strength, and increasing liquidity. The direction is clear, but it won't be perfect, he says. For individuals who comprehend the situation, this could be a once-in-a-lifetime chance. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content. And as always, happy investing.